Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. We'll also take a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got 4 additional trade ideas to share, so definitely stay tuned for that. The video is certainly coming out late tonight, so whenever we drop a late night video, you know there's a special keyword associated with that. Drop that in the comments section now. If you don't know what the keyword is, I'm afraid you'll have to wait until the end of the video, and then you can drop it in the comments section then. Without further ado, let's jump into the S&P analysis as we always do with our sectors. Who was leading, who was losing, and where was the weight? The XLE for energy led the pack today, up 1.72%. However, don't be deceived, that's as measured from yesterday's close. There was a big gap, but from today's open, it obviously faded, and we actually closed down 0.16%. So the true leader was actually utilities, up 0.14 from yesterday's close and up 0.24 from today's open. Does it really matter which one is in the lead? Absolutely not. We know both of those sectors are fairly lightweight. They're also both risk-off, more defensive type of sectors. At the bottom of the barrel today, we see the XLF for financials down 1.85. A majority of our heavier weighted sectors are actually at the bottom of our list today. However, that's a-okay given that we saw a pullback on today's session. Remember that this is a snapshot of 1 day's worth of time. The majority of this rally to the upside was carried by our heavier weighted sectors. So not really a big deal, our distribution of sectors on the list today. Our heaviest weighted sector, of course, is the XLK for the tech sector, down 1.54. XLF is the second heaviest weighted that we already covered, and the XLV is the third heaviest weighted sector, sandwiched in between the two of them, down 1.80%. Let's check in on these charts, though. I think the most important thing that we can do is just ensure that the reversals and new trends that are forming aren't being jeopardized. And I think the answer to that question across many of the things we'll look at is no. There's really no threat that we are likely going to give back everything that we've seen so far. And the XLK is a great example of that. You can see that we have on today's session just a day of balance, right? Two-sided back and forth activity was taking place, aka price acceptance, price digestion at these highs. Remember that you can consolidate sideways through time, or you can consolidate via price pulling back harder. The most bullish of the two is obviously sideways through time and not seeing those lower prices in the first place. And even as we crack the low of the prior day, there was no aggressive seller that really stepped in and took advantage of the thin structure on the way up, getting us closer to that 150 pullback point. So to me, the XLK is actually poised in a fairly bullish location as of right now, and I think the majority of the pullback came from the XLF. We'll take a look at that chart in a second. However, I would also point out from a trend perspective in the XLK, if we're going to pull back and form a higher low, remember that 150 is still the ideal location for that to take place. Anything above that is fantastic, and it doesn't look like that's being jeopardized into the remainder of the week. So in the XLK, I'm not seeing a huge amount of risk for our S&P 500 marketplace. If it continues higher and we take out the 2-day balance highs, we hold 154, we could potentially travel into the 2-day pivot high right here. It was the first lower high, right? At 159.25, that's your upside target. Again, I would probably look for two-sided balance to continue here, but we'll see. One step at a time. I don't think there's a ton of risk in tech. Let's continue along and talk about financials, though, and you can clearly see that the picture is slightly different, right? We did take out the prior day's low, and we did get some more aggressive selling pressure. So I think that this is really what drove the pullback in the S&P 500 itself. And if we continue to see this pull back, and even if the XLK is going sideways, neutral, getting that bullish consolidation, I think that that will continue, or this rather will continue, because I'm talking about the XLF, will continue to cause a little bit of pain, some more aggressive pullback in that S&P 500. So the level to be watching into the end of the week is going to be 38.50. If we remain above that level, then fine. Price digestion sideways. I imagine that the S&P starts to go sideways as well, especially if the XLK continues to go sideways. If both things are pulling back, obviously the XLF and the XLK, the S&P should pull back as well, right? Can only do so much to combat what the heaviest two-weighted sectors are doing when they're working in sync, the XLK and the XLF. We would imagine the S&P follows suit. So if this breaks, and even if the XLK is going sideways, that's where our more aggressive pullback starts to unfold in the S&P 500. However, bringing it back just to the XLF, does that jeopardize the reversal that's underway here, or the start of this new uptrend? And the answer is no. Even if this breaks, we know that there's still potential for this to form higher lows off either the top of the gap here for something that does this, or even if it fills the gap and does something like that, we're still putting in a considerable higher low from there to there. So it does not really jeopardize the new uptrend that we've been forming, noting also we can afford this higher low pullback because we've set a significant high. So I'm not really seeing a huge threat for the longer term pictures of the charts, but in the short term and to the end of the week, continue to keep an eye on financials, which have primarily caused the pullback so far, firmly taking out the prior day's low. While we're talking about financial things, let's take a look at the TNX, and this of course has to tie in beautifully with the XLF. This has been screaming to the upside, right? And as we see pullback, that's when the XLF itself starts to pull back. So we know that the relationship between banks and financials and rates is that as rates increase, the banks like that type of environment. They can make more money on their loans. We've talked about the breaking point in the past, but as this is pulling back, now that we're adjusting to this new normal and the Fed supported policy of 0.25%, 25 basis point, always get those mixed up, but you get the gist, increase in the remaining 6 meetings of 2022, financials are enjoying the higher interest rate environment, right? So as this pulls back, it's no surprise to see your XLF pulling back as well. If you want to watch all three things, again, keep an eye on the TNX. If this is moving lower, I would imagine that you see continued pullback in the XLF. Keep an eye on the XLK. If that's going sideways, probably means that the S&P 500 is going lower. If the XLF is pulling back, the TNX is pulling back, and the XLK is, taking a huge swing to the upside, maybe it's more of a neutral move and a neutral day in the S&P 500, noting that you have push and pull between the two. Okay, so something to keep an eye on and the relationship between the big three that we usually talk about. Let's get into the XLV for healthcare just to round out our sectors. Again, I do think that this is taking a backseat to XLF and XLK. I've been very transparent about that the past couple of weeks. Nonetheless, this one clearly breaking down out of this 3-day balance up here. Could it have something to do with the pullback in the marketplace? Yeah, absolutely. There's no doubt about it. We did set a lower high and a clear lower low, but what I'm watching for here is what happens on the back test of the top of the prior range at 133.30. Are we going to do something like this? Put in a beautiful higher low, something that does this. It remains outside of this balance area right here. We're making forward progress onward and upward, right? 133.30 looks fantastic because we're pulling back aggressively. I would watch and, not get overly aggressive until we start printing some sort of hammer candle, some sort of indecision doji, basically an indication that the sellers are kind of taking a little bit of a pause at this level before looking for that reversal back higher. Even if it does break, it's not the end of the world from our trend perspective. Note that this was an extreme higher high, noting that it took us outside of this balance area and much sooner than what we saw in the XLF and the XLK. Even if that breaks, again, there's possibility that the moving averages as well as this area right here, low end of balance, let's clear that up. Low end of balance, resistance, 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 it breaks, and that's when we're off to the races. 131 is your line in the sand for that continued higher lows type of trend to continue, okay? So XLV, not seeing a huge threat here. It does look like the one that could dribble a little bit lower and maybe move into that level and put a little bit of pressure on the S&P, but as I've been saying, main stage is XLK Tech and XLF Financials. Let's continue along and talk about our last sort of behind the scenes look at the VIX, okay? What's going on in the VIX? Clearly continuing to crush, but slowing down just a little bit. So here's my take on the VIX, right? We're still well above that 2050 floor. So if I scrunch this up, you'll notice that 2050 used to be a ceiling, right? It was very rare that the VIX would spike up above. Now we've been getting lots of price acceptance above. So as the S&P potentially cools off sideways through time, keep an eye on what the VIX does. This is going to be very telling. If the SPY itself is going sideways and the VIX is continuing to pull back and maybe even gets back down underneath 2050, that's an extremely bullish indication telling us that people are feeling more comfortable about the environment of the market right now and more willing to put dollars at risk. If the S&P 500 is going sideways and our VIX starts to creep back higher, obviously, that's more of a concern and might indicate that there's more risk in the future. We should be looking out for liquidation break type activity, right? This is big snaps to the downside. Doesn't necessarily mean stronger selling, but larger breaks to the downside on an intraday basis, right? So that's my main watch here in the VIX is what happens as the S&P goes sideways. Does the VIX collapse a little bit, or does it start to perk up as maybe a heads up indicator saying, hey, people aren't quite as giddy about getting back into the market as it may seem out there, okay? So that's what I would watch out for in our volatility index. Let's get back on over to the S&P 500 itself and start to analyze the levels that are in play into the remainder of the week. There's a couple of things we should do together. Clearly, we're above the resistance trend line. We can remove that from the chart now. We're also going to get rid of 444, noting that this level, although it was today's low, is not as important as this level right here. 441. Okay, why is that the number? Well, it's the 50 SMA, it's the low of Monday, and it's the high of Thursday. If you extend that to the left a little bit, it's also this high from right around in here. That That to me is your ideal rainbows and butterflies bull flag consolidation on the daily time frame. Something that does this, eventually looking for breakouts to take us to that double top ultimate target at 457.50. We know that's the number. It's been so for quite some time. The reason I call this rainbows and butterflies is because if we let me start over. Is because if we come in with our Fibonacci's, there we go. You can tell it's a late night video. We will see that the 38.2 is well underneath that level here, and the 38.2 generally marks bull flag consolidation. Okay, so looking at something like this, still okay for the bull flag scenario in our S&P 500. That number, by the way, the 38.2, is coinciding perfectly with the 437 coming from the top end of balance support and the midpoint range from right around in here, which also had some intraday significance. So I like both of those levels to the downside. If we see continued pullback in the first place, I would once again mention that even though we took out the low of yesterday's range, it's not like we saw aggressive selling. If you were watching on an intraday basis, it was very, very muted. As a matter of fact, let me just show this on a 30-minute time frame. So here we go, right? Let me just put in with a level the prior day's low. Here it is right here. Generally, when you break that, you would expect stronger selling to occur. On the morning session, we kind of held it. As we break it, we just get sideways acceptance a little bit into the close, right? Market on close orders, nothing to really be surprised about. But nonetheless, on the intraday, as we break, not only the double bottom from the morning, but the prior day's low, the stronger sellers did not step up. We just went sideways. So to me, that's an indication that, hey, people aren't really confident in shorting this market into oblivion. It still is in control of the bulls on these higher time frames. So with all of that being said, let's take a quick peek at market internals. Let's zoom in on these. If you're not familiar with this screen, go ahead and get familiar. I'll put our link in the top right-hand corner that's going to be popping up as I'm speaking and zooming in. What do we have in the internals? So what I would point out is that, again, on any single down day, did we see significant breaths? Absolutely not. We're generally looking for minus 300 million, plus 300 million. The only day that we were screaming higher, we actually saw just shy of 300 million. So there's no real bearish implications based on the outflow of volume in the marketplace. The same thing holds true with our advanced decliners. You can see that fairly neutral, just going sideways. Sure, it was lower, but keep in mind that as this is going sideways, it just means that not a whole lot of things are changing across the marketplace. Things aren't getting more bearish and things aren't getting more bullish. Sure, this little distance right here is indicative of more bearish, but overall pretty flat after that initial move. It's not like throughout the course of the day, things were trending in one direction or another. On today's session, even as we're pulling back, the advanced decline line is actually trending higher and then flattening out. Bullish on the day where we were higher, right? So nothing about this is overly concerning or would be indicative of a stronger seller stepping in. The same thing holds true with our cumulative builds here on the tick, right? Nothing about this is overly bearish. If you compare that to even some of the more aggressive down days in the past, look at that. I mean, it doesn't even show up on the radar compared to what we saw down here at like minus 6,000 on the cumulative build. There's nothing about the internal screen so far that would indicate stronger, more consistent selling is taking place. Any of this selling that did occur is basically liquidation break. This big sell right here, just an overreaction to the JPOW news, right? As he sort of was talking, any of these people who were net long up here at poor trade location, essentially the top end of the move, they get spooked out, right? And those are the people that sell. The people who are still long from down at the bottom of the move, those people aren't selling. They're just trailing their stop up higher, right? So nothing about this seems indicative of longer term sellers stepping into the marketplace at this point in time. Let's take a quick look at our market profile as well. If you're not familiar with this, I've got another video for you in the top right-hand corner. Feel free to check that out if you're not familiar with some of the terms I'm about to use. What I would point out about the most recent sessions is look at what's going on with value, right? Look at value here. Value is overlapping. We get a day up here. And now it's just a day of balance. It's not even really overlapping with what we saw here. So it would be incredibly difficult to say that any of this activity that's taking place up here at the highs is bearish. Look at where the point of control was. It was higher on today's session. A little bit of a spike into the afternoon, right, as we close, but nothing, overly concerning. We just basically go just shy of the point of control here, tag up, and now we're balancing in the overnight session. We'll see what happens by the time the open rolls around, but from the longer time frame perspectives, nothing about this activity is bearish whatsoever, based on where value is developing, based on where the point of controls are seated. You can see that our single prints here, they were retraced, but again, stronger sellers didn't really come in. It's not like we saw a string of singles that took us down to this low or anything lower than that. So market profile just telling us that value is building out higher in this overall section right here. As long as we kind of remain up here at these highs, fine, really just bullish consolidation sideways through time in this marketplace. Let's get back on over to the platform and round out our broad market with the QQQ NASDAQ 100, of course, ETF. What do we see here? Very similar to the XLK, a day of sideways acceptance instead of a day down like what we saw in the SPY. A bullish indication, getting sideways price acceptance, consolidating through time, as opposed to pulling back via price. Some levels to watch out here. Definitely this one, obviously the close, because it was 2-day highs. We break that, and now we're pulling back right to it. That's 352. Use that as a pivot into the remainder of the week. If we're above, cautiously bullish, looking for consolidation, right? That's like your, that's even better than rainbows and butterflies. I don't know what that is, but for someone, that's like, up and over the moon, right? That's perfect. But if it does pull back, fine. We're looking at this right here at 346.12. Why is that the number? Let's take a look at the 30-minute time frame. We'll see why. You can see not only was it the low of the Monday session, but it was the highs of right around in here. It was the pullback from Friday as well. So to me, as long as that holds, fine, right? There's your double bottom kind of holding around in this area. As long as we're above that, fantastic, right? That's still bull flag consolidation on our daily time frame. Let's just take out the fibs from the lows all the way up to the highs. You'll notice your 38.2 is even lower than that, as a matter of fact, closer to 342, right? So in the QQQ, I'm not really seeing any reason to be bearish at this point in time. Could you capture a little bit of a pullback on the breakdown of 352? Yeah, absolutely. You could take a short trade in there, but I wouldn't push your luck and look for a major reversal all the way back down towards the lows. It would be more of a day trade scalp, looking for something that does this and then reevaluating, right? Definitely locking in some profits, trailing your stop to break even. You don't want to turn this into a loser, fighting the overall trend and strength here in the marketplace. Let's continue along and talk about IWM Russell 2000 and the small caps. What's happening in small caps here? You can see just balance, just like we've talked about in everything else. We did take out the prior day's low, a little bit stronger selling. We're sitting right on that 204. We know that 204 is your rainbows and butterflies scenario, something that does this, and then breaks of 208 get bullish. However, if we do break 204, 201 is still acceptable for a higher low pullback, something that would do this. Right? So not really seeing any major red flags in IWM either. Cooling off sideways through time, not really via price just yet, but there's possibility. There's possibility, especially noting that this is more of a 4-day balance. If this does break, it's a little bit more significant than just getting that pullback in the SPY or the QQQ that we've seen so far, because we've already seen the price digestion, right? We've already gone sideways for a couple of days. You really want to see this one turn up, remain in the balance, and then break this way. Otherwise, I would say it's easily back down to 201, noting that it's a clear doubling of the range to the downside, and anything underneath 201 not looking so hot, right? I would certainly, concede that in IWM. That would not have me feeling confident about the marketplace as a whole. If this were to fail back down under 201, get back down into this two-sided chop zone, it would seem to me that this is just another failed attempt to break out of this range, exactly like what we saw back in here. So IWM, use it as a risk-on, risk-off type of monitoring device, if you will. If we remain in the balance, fine. Remain risk on, sort of looking bullish in the marketplace. If we fall out, start to be a little bit more cautious here, and that's all for our broad market. Let's get into the core list of companies, right? What's going on in Apple? Clearly, still screaming to the upside. Just an absolutely insane move here inside of Apple. I believe they acquired some company today, smaller company. It seems like they do that every now and then regardless. Sort of a big upper wick right off of 171, the top end, or excuse me, bottom end of this prior bull flag consolidation right here. It's been up now, let's just count, 1, 2, 3, 4, 5, 6, 7 days consecutively in a row, big green bodied days. I mean, to me, I'm still going to stand by what I've said in the past. The risk-reward profile here just does not seem friendly. The upside reward doesn't seem favorable compared to the downside pullback risk. I'm not saying it can't continue higher, but I would just be completely out of place telling you to chase this up here at the highs, saying that it looks like a good setup. It simply doesn't from the longer-term perspective, I think. And one of my own personal fears is just that this pulls back, and the people who were chasing it up here realize that, and those are the people who fold, right? And as they start selling, that's what leads to these sharp liquidation breaks, like down, $2 in the blink of an eye. It could be like a 10, 15-minute span, you're down $2 in Apple because all of these people who are piling in long at the highs, they realize, okay, we're not really getting paid anymore. The market's not really moving much higher. It's just kind of going sideways. I don't want to be here anymore. When they sell, that's when you get those sharp moves to the downside. So that's really my feeling in many of these things. And please don't misconstrue that as me being bearish here. Inside of Apple, clearly we've broken the resistance trendline. We're back above the 50 SMA. Everything about that is bullish, but I am waiting for a more risk-friendly entry point in many many of these companies. And what that would consist of is either cooling off sideways through time or pulling back via price. If the pullback happens, it would probably be a break underneath 167. And if it takes us here to 162.50, fantastic. I'm all eyes on for any hammer candles that form, any sort of intraday double bottoms that form off of that level, inverted head and shoulders that form around that area. Pullbacks do seem very viable here in Apple, especially noting the strength, the momentum, the break of the resistance trend line, the 50 SMA. So that's what I've got to say in Apple. It's going to ring true for many of the things we're about to look at. Let's continue along though and talk about Netflix. This one looks much more tradable, right? If we just look and think about what I was just discussing, here's 4 days of cooling off sideways through time. If we break the top end of the range, that's bullish. You're looking for your next target here, 397. If we break the low end of the balance, obviously it's a failure of the bull flag, and you're probably not overstaying your welcome to the downside. Noting the momentum in the name here, you don't want to fight that too hard. I would just look for a quick scalp into roughly 362. That could be a day trade, right? Break the bottom end of the range, start to target this level right here. If we start getting below that, that's where, okay, maybe this was a bit of a fake out, but until that actually happens, it's very hard to ignore the bullish price acceptance up here at the highs, right? Look at today's session, complete inside bar. The selling was not aggressive whatsoever. It's hard to say anything bearish about this chart other than obviously the major trend on the daily being down. But in terms of this short-term little reversal back to the upside, it looks bullish, right? This bull flag pattern, there's no ifs, ands, or buts around it. It's got to be bull flag consolidation. Let's just clean this up a little bit, put some more relevant levels on the chart here. We'll grab the price level tool. There we go. So breaks of 383 roughly take you into that next target, 397. Breakdowns of the low take you to this prior lower high from right here to here at 362.30. Let's continue along. Tesla. This is one of those very similar to Apple where I would not want to chase this up at these highs. The same sort of implications are, that we talked about in Apple ring true here in Tesla. Big inverted hammer on the day. Sure, it was a green close, so that is a little bit, noteworthy that we closed above yesterday's high as well. But nonetheless, the upper wick is fairly frightening, especially being up 1, 2, 3, 4, 5, 6, 7 days in a row. Pullbacks here do want to start holding in an ideal picture perfect world. 945, something that builds out bull flag consolidation. Fantastic. Anything underneath, I would start to use 900 as a line in the sand, noting it's roughly 50% of the overall move. You really don't want to see it retrace any more than 50%. Otherwise, you risk, losing the 61.8 and just overall a big fake out. So to me, 900 is the new line in the sand on the downside here in Tesla. It would also be supporting at the 50 SMA now. That would be fantastic. Again, if we get a pullback that takes us there, I'm all eyes for any type of hammer that prints, any sort of indecision doji, any sort of bottoming pattern. That to me, extremely viable here inside of Tesla, especially note the difference here as opposed to many things we've looked at so far. What's happening with volume? It's still increasing as we're getting this move higher. So to me, this one carries a lot of the momentum right now and pullbacks, and it should definitely be viable at some of these levels, 945 or 900 inside of Tesla on the pullback. If it wants to just continue, fine. It's a balloon. It's floating away from me. I'm not going to chase it. I'm not going to start jumping at it, and I'll just watch it float away into the clouds. That's fine. You don't have to catch them all inside of trading. There's always another setup around the corner. AMD is up next. This one also in a tradable state right now, just really balancing, which is surprising in the current context of the bullish market. What I do think is tradable about this is the fact that we have multiple upper wicks that have failed outside of the original 3-day balance here. Is it a look above and fail is the question. So to me, any pullbacks that continue in the SPY or the QQQ, shorts in AMD looking for at least the bottom end of the range and then potentially watching for it to break down underneath 110. I wouldn't be overly aggressive, but if you do need a short opportunity, if the market's sort of crumbling a bit, AMD is the name to be watching. I wouldn't try to risk catching pullbacks in those names that have been screaming to the upside. I would look for where there's already relative weakness, and AMD is that name. Okay, so that's my thoughts here. Again, as long as we remain inside of the balance after these upper wicks have proven that it's a look above and fail, any short setups on an intraday basis, so bear flag on a 5-minute, descending triangle on a 2, 1, 5-minute, 15-minute, even fine bearish setups taking us into 110, if not further, if the remainder of the broad market is also pulling back, notably the QQQ. I wouldn't expect it to get all the way down here, certainly not calling for that, but just monitor for continuation, right? Trail your stop lower if this is the trade that we end up sort of pursuing with a falling broad market. FB up next, Facebook, Metaverse. What do we have going on here? You can clearly see bull flag consolidation. This one's probably the prettiest, just noting that we have higher lows consecutively on the daily time frame. However, we do have a lower high. So inside bar on today's session, it is an inverted hammer. I will totally concede that. I've been transparent that my position is working its way back to break even. My average is somewhere in here at this point in time. So for me, I truly do want to see it break up and over 217, but I also want to be realistic about this pattern. If we get the break, fantastic. The trade goes into the money and we're looking for, better trading opportunities essentially through this zone here. But if it starts failing at the support trend line, maybe it's not all rainbows and butterflies, right? If it breaks here, probably looking for 203.50s. That's the ideal location for a higher low to be formed, something that then does this over time. But the must hold, like no ifs, ands, or buts about it level, is 199 coming from the prior high right here. Again, with today's inside bar, it doesn't seem to me that sellers are being overly aggressive. If they were, they would have taken it underneath yesterday's low and maybe gotten some follow through to the low end of the outside container bar here that we've been discussing. It just simply wasn't the case. So monitoring this trend line and monitoring 217 for potential breakouts. If the market's pulling back, watch the trend line. If it breaks, maybe there's a short scalp into 203.50. But as of right now, I like the pattern that's starting to unfold. Certainly bullish here inside of Facebook as long as we remain inside of it. Next up, we have NVIDIA. What's going on here? Breaking down out of the 2-day balance. So for now, it's got to be a little bit more bearish, right? This one, you could look for a continued pullback opportunity if your QQQ, if your SPY are pulling back aggressively. Look left, thin structure, right? This is best illustrated actually on a 30-minute time frame. Here we go. Descending triangle, right? Lower highs, lower highs, lower highs. We break all of these equal lows. It was the critical support after this flag from right around in here. Now that we've sort of closed right on the low of this session, I would use this as a pivot. So 250, let's call it 259 just for round number's sake. If we fail to accept above that on tomorrow and then flush through today's low, look left. Again, thin structure on the way up. Start targeting these areas around here, 245 roughly, just for round number's sake. Easily could be attainable based on the lack of anything to support in this overall range. So that's your NVDA. To me, looking for downside now that we're outside of the 2-day balance. But again, it's not a short-sided trade. And I hope I said short side, not long side. It's a late video. Give me some slack here. So looking for short side, right? But it's not an overstay or welcome type trade. You're looking for this, and then you're probably closing the majority of the position, noting that you're fighting an extreme amount of strength, and that would just be giving us about the 50% retracement, right? You don't really want to see it much lower than that if we are to remain bullish on NVIDIA. Let's continue along and talk about Microsoft. And by the way, there is opportunity, at least, if this does poke above and get acceptance above 259, look below and fail, right? On the 2-day range, target has to be the top end of the range at 272, right? So there's a number of ways to play this. It's a beautiful thing whenever you have perfect consolidation like that. So hopefully this isn't too rambly. Again, I know it's a late night video. Drop that keyword in the comments if you haven't done so already. And I guess I'll just tell you it right now. I know we're a fairly good chunk through the video. It's night owl, right? It's night owl. That's always what we're talking about whenever the video is late. Anyways, Microsoft, what do we have here? More similar to the XLK and the tech sector, just noting that we're getting that consolidation sideways instead of pulling back aggressively. So to me, this is a better bullish candidate, right? Any more sideways acceptance up here strikes me as being optimally bullish. Longs up and over this get us into 311. We know that's been the next range to trade for now that we're accepting at and around 300. Even if we do pull back, higher lows can be achieved as long as we hold 290, 289.50, the top end of this range right here. So not seeing a whole lot of risk here inside of Microsoft, even if it does pull back, right? Things are fine in terms of the beginning of this trend reversal as long as we support at 290. Breaks up and over, we talked about 311, that's fine. The implications of today's candle, not overly bearish or bullish, right? Certainly a little bit more indecisive as opposed to a clean inverted hammer. Continuing along, last one on the list is the beast, Amazon. Not for too long though. June 6th is the split. Inverted hammer, right off of our area of resistance, right off the 200 SMA, 33.35, looking for shorts underneath today's low, especially because it coincides perfectly with the Monday high. If that happens, so underneath 32.55, we'll call it, just for round number's sake, underneath 32.55, looking for rotations here, the neckline essentially of the weekly, right? It's a weekly double bottom here, and of course, it's the weekly low end of the range at 31.76. Let me just illustrate it. I know you've probably seen it a million times on the channel, but for anyone new, it's the low end of this range right here. You can see support, 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 neckline of the weekly double bottom that we just pointed out. We want to remain above that at 31.76, okay? So that's Amazon in a nutshell. Again, this one looking a little bit more bearish with the clear inverted hammer off the 200 SMA and resistance. Shorts underneath today's low take us into that level. But again, do not overstay your welcome. You're fighting a very aggressive, highly momentum, highly momentum-driven uptrend here or reversal inside of Amazon. Obvious break of the resistance trend line, 50 SMA. You get the gist, right? So enough of the core list of companies. Let's get into our additional trade ideas for the day. What do we have on the docket? SQ is the first one. What do we have here? Just like almost everything else, bull flag consolidation. However, 1, 2, 3 days of balance, respecting it, going sideways. If we take out the highs, look left, your next target, probably right around in here at 152. That's a day trade. So if we take out these highs, let's go ahead and throw that level on. 142.72, boom, there's a day trade. And then after that, your next target is coming from right around in here, around 171. So a little bit of a better reversal opportunity here in SQ now that we've confirmed, right? Higher lows, double bottom. We were respecting the neckline of the double bottom. We're getting bull flag consolidation above this area as well. If we break 131 to the downside, not so interested, noting that we have thin structure on the way down. And again, it would be or seem very likely that we at least travel to the neckline, giving back more than 50% of this most recent swing to the upside. So watching for the bull flag to pan out to the upside here inside of SQ. You want to see the broad market holding sideways, if not trending higher, right? If the broad market's falling, this is not a setup for us. Next up, after SQ, we're going to take a look at CRWD for CrowdStrike. What do we have here? Clean break of this level. Prior daily pressure cooker top. As long as this one holds now on any pullback, something that does that, we have a break, retest, looking for longs, and then continuation at least to the 200 SMA and this prior set of highs right here around 235. Note also that this is continuing to the upside even as the broad market's getting a little bit of a stall out, right? Sure, Tesla screaming to the upside, Apple screaming to the upside, but overall, this one following suit with the bigger boys, the ones with more momentum, I like that. I like the fact that we also have daily structure to be playing off of. Again, as long as we're above 212.50, fine, looking for this to either consolidate above as a bull flag, pull back, give us a hammer candle here, then we get some sort of break and retest long over the highs, and your target's coming from here, thin structure on the way down, pivot highs, 200 SMA, makes sense to the upside. Not interested in the trade if we break down underneath to 1250. Next up, we have RBLX, right? Roblox, RBLX, there we go. And the trade here is patience, but is it going to turn into some sort of inverted head and shoulders, right? So I want to point out the neckline currently right here around 52.25. If it breaks, look for the bottom of the gap, and then the top of the gap is what makes this trade attractive, right? So if we pull back, put in a higher low, basically we would want to see it above this level here, 46. Let's put that on there. So as long as it's kind of in this area and then reattempt here, look for this bottom of the gap, top of this range, and then the gap to fill. That's what's making this trade attractive. The fact that this is a big void of price action. So it will require patience. It's not guaranteed to pan out as an inverted head and shoulders, but if it does, wouldn't that be something? You have a perfect setup here on your hands inside of Roblox. Not too interested if we break down and start getting price acceptance underneath 46. Next up, what do we have after Roblox? It's going to be SNOW for Snowflake. And this is the last one on the list. Very similar. However, we're already at the bottom of the gap, putting in a bull flag. If it breaks out up and over 230, looking for the gap to close at 250.60. Now, keep in mind, if the broad market is going to pull back, then as we've just discussed multiple bullish setups, they're probably patience plays. As long as you remain in the flag here, as long as we put in a higher low and then reattempt, these trades will remain on the table. These levels will remain valid, but it will require patience, right? This is if the broad market starts pulling back. If the broad market continues to scream to the upside, these are great setups to look at. So that's going to wrap up the video. I know it was a long one. I know it was a late one. Again, drop me that keyword in the comments section. It is Night Owl. And with all of that being said, I wish you a green trading week.